So BRRRR is not dead. This is Mike Bond. We're going to talk about the money side of BRRRR because BRRRR really requires two loans. It's very money dependent. Real estate investing is really money dependent. You need leverage. You need to get into debt to make some money. We're going to go over today why BRRRR is not dead and what it looks like when inflation hits, when money tightens up, what that all means, and how you could actually be successful in BRRRR even during these times of uncertainty in the markets and the real estate. So let's get going. First of all, we're just going to go over a quick recap. What is the BRRRR strategy? How do we see it? What do we look at it? Especially from the money side. BRRRR comes down to a couple key factors. It's really buying under market properties. And I think that's where a few people have got confused over the last few years because it's been hard to find under market properties. You know, we see people buying stuff at 80, 85% of the ARV. What we're going to see in the future is those values actually come down. Back in 2010, everyone is buying stuff for 60 to 65% all in. We hope that's where it goes again. That's what we're looking for. BRRRR, first of all, is buying under market valued properties, and those are coming back. The second part is what we call the two-step loan process. The only reason to do BRRRR is to get into properties with little to no money down. That's what it's all about. And it all comes down to you actually using two loans, one to acquire it and one for the refinance to hold it long term. As long as you own the property, which is when you use that first loan, you could refinance it and use the current value or the appraised value. So if you bought that under market valued property, you put the money into it and you own it, which means you buy it with that private money. Now when you refinance it, you get to capture that equity. That's where instead of taking money out of your pocket, you're actually using the equity that you created by buying the under market property to buy more and more real estate. So BRRRR really is about buying under market real estate and using two loans. So what has happened to the availability of money for BRRRR as things tighten up, as inflation goes, and what to expect in the near future? So we went over briefly what is BRRRR, and we have a lot of great videos on this channel about BRRRR. We've been doing BRRRR for like 15 plus years before it was called BRRRR. So if you have any other questions on fundamentals, how things work, check them out on our channel. But right now we want to go through BRRRR and inflationary. What does that really mean when money is tightening up? What does that mean for a real estate investor, especially someone buying rental properties with a BRRRR strategy? So number one, they say inflationary and money is tightening up. What that means is there's less money available for all real estate investors. What the government's trying to do is make money harder to get so people stop spending as much. What we see now in the lending world is that tightening up becomes from lower loan to values. Maybe your hard money lender would give you the 75% to be all in on a property. Maybe now that's 70. So what we're seeing is LTVs come down not only on the front end loan, but also on the back end loan. Freddie Mac came out this week and they're tightening up their cash out requirements, which means it's going to be harder to get cash out, which means they're requiring, like everyone else, lower loan to values. It's going to require more money in or just a better deal. They're requiring better credit scores. Credit scores have gone up a minimum requirement of 20 to 40 points. So if you're someone whose credit is kind of on the border, you really need to work on your credit. Once again, we have some great videos out here on how to raise that credit score. Everything we talk about is being money prepared. We talk about how leverage is king in real estate investing. You need to now take this serious because there's less money out there. You want to be one of the people who gets some of that money when the prices come down and you could jump into properties that values haven't seen for years. So LTVs are going down, credit scores are going up, less money available for everyone, and actually income requirements are changing too. So they want to make sure that whoever they lend to is the best of the best, that there's more equity. And they're looking at the equity because prices are coming down. So when they lend at 70 today, and in 6 months, rates or home prices have gone down 10%, their 70 is not 70 anymore. So they're being more conservative. Money is more conservative during this time until they figure out a new level. There's going to be a new level out there, and then everyone could, work off that level. Right now we're going down, so there's going to be less money available for all of us. Just make sure you're the person the lenders, the banks want to lend to. Get some money prepared to put down with partnerships, OPM, whatever that is. Get your credit score up. and make sure you don't have a lot of other debts that are going to drag your DCR or your debt coverage down during these markets. Rates are going up. We've already seen that. They keep going up. They've more than doubled this year from conventional and even into the DSCRs, it actually even gone up more than double. That's what you're looking at when inflationary markets hit and you're looking at getting into investments like BRRRR. Cash flow is going to take a hit because of this, and so is your cash. So there are some new lending options though for BRRRR. What we've seen over the last 3 or 4 years with rates so good that all the lenders focused on one product, and that's the 30-year product, which means you got into a mortgage and it doesn't change over 30 years. Those are great interest rates, but when rates are increasing, you're going to find some other options out there that may be just as good or at least bridge you till the next time rates go down. So you're going to see more ARM products, so adjustable rate mortgages. You're going to see something like a 3, 5, or 7-year ARM, which means during that time period, rates will be fixed for either the 3, the 5, or 7 years, then it becomes adjustable. And in rising markets, those are not that great. Declining markets, they're actually really good, but it is a bridge. And typically in a normal market, what you'll find is a 0.5 point to a point, sometimes even 2 points lower than the 30-year fix. So when you're looking at BRRRR, when you're looking at some of these other strategies, that may help you cash flow the property until you could either hope the market changes and you sell into it, or you could refinance into a 30-year fix as rates come back down. Another thing that we're seeing more and more is interest-only loans. So that's typically where you don't pay any of your principal down for the first 10 years, and then it amortizes after. So what it does is it puts more cash flow back into your pocket again. Yes, your loan is not coming down, but if it is about getting into properties when property values and stuff go down, they're low, this is another option to look at. Interest only, as far as cash flow, it's a great product. There's more and more lenders out there, looking at and doing these kind of things. One last thing I've seen some do, not all, is go to a 40-year AM. So instead of 30 years, your loan pays off over 40, which gives you once again more cash flow. The lower the rates, which is through ARMs, or the longer the period through like a 40-year AM, or just not paying any of the principal down, is going to increase your cash flow. Yes, most of these will not help your equity, paying it down faster, but if you want to take this as getting into properties while the values are low, you got to look at some of these other options that are out there. It'll be ever changing. You have to be plugged into the money side, see what options are out there, see what lenders are changing, and see what's available for you for these BRRRRs, for your rentals, for all your real estate investing needs. So we've gone through some of these, but I want to reiterate because it is what's happening. So the BRRRR loan requirements. There's 2 loans out there. There's the hard money, the private money, the one you buy the property with. Then there's the long-term loan. What you're finding out on both sides, both instances, you may find lower loan to values on your private money. We see a lot of lenders now on the private side going to require 20% down. We have an advantage, we fund different things with real private money. So we go up to 100% of the financing as long as you are approved for your loan up front. That's where we are now, that's where we have been. So we have a good advantage there, but most private lenders, that number 1 loan, they're going down in their loan to values. So you may need more money in, and then the long-term loans like the Freddie Mac right now, they're actually decreasing, making it harder to get cash out. You may see that go from 70 to 65 or just harder requirements. The higher the credit scores, they're really focusing on credit scores and loan to value right now. The money is shrinking, which means the pot of money you're going to get for one of these transactions is shrinking on both ends, both in the hard money, the private money purchase, and the refinance. What we say when you're getting into this is understand your lending requirements now. Get into a BRRRR, if you're getting into a BRRRR, get it fixed fast and refinance fast, because these things change so rapidly. Rates keep going up, requirements are definitely going to go up. This is a time to make sure when we say someone gets into a BRRRR, they always get their long-term figured out first, because that's what's going to carry them through it. And then we could figure out the short-term loan. Remember, as you're going through this, LTVs are decreasing, rates are going up, credit requirements are going up. You have to be in a better position. But the good side of that is, if you are in a good position, there's going to be an opportunity for you to find properties in your price point where you want. You're going to get them 20, 30, maybe 40% less than you were a year or so ago. It's the opportunity to jump in, but you got to be money prepared. That's what this whole business is based around, is using other people's money, and you need to be prepared for this, but be prepared for what's happening now. Don't fight it. Figure out how to use it, and we will go through some ways to come up with that money here in this next section. What are some other BRRRR options, or how can you actually finance BRRRRs as values go down? We're probably 3 to 6 months out from where the real cheap homes show up. But the other things, that we see people do is look at these other options we've talked about before, like subject twos, owner carries, and stuff like that. And how do they replace like a BRRRR? So what are other BRRRR options? If you look at BRRRR, it's all about getting into properties with little to no money down, and typically value add properties. But another strategy, another way to look at this is like, if you could take over someone's loan in their home without you putting up any money, any credit, anything like that. So you don't need the credit, you don't need the income, and you could take over with 100% financing with a great rate. That's what subject twos are. And you're going to see more and more of those because some people do not want to go through foreclosure. They can't sell their homes. Maybe they bought it at 100%, values have come down 10 or 15%, so they can't sell it without putting money into it. So they will be open to like a subject to. So you could go in, take over the mortgage, put the home in your name, all done properly, all through title, and actually take over, create a rental property using someone else's money. Once again, not using your credit, not using your income, not qualifying, just making sure you make the payments for them. Sometimes that means setting up escrow payments or anything, but it is a great way to purchase rental properties and maybe replace BRRRR during this time. And especially if you don't have the money with the loan to value shrinking, which means you have to put more money in, requirements going up for credit and everything, this may be something you focus on. Another one is owner carries. What that means is you're buying a property and maybe the owner owns it free and clear, or the majority of it free and clear, and they're willing to actually take on the mortgage. Instead of going to a bank or a hard money or a private money, they actually will take on the mortgage. And why would they do this? Because a lot of people are going to take that money and they're going to put it somewhere to invest. They don't want the stock market because it's going up and down. They don't want banks because they're getting 1 or 2%. So you go in, offer them to buy their house, owner carry the property. So instead of them making like 2% from a bank, maybe you offer them 4 or 5. It's a benefit to them. They've doubled, maybe tripled the interest rate they were going to get. It's secured by the asset they already know. And for you, you get easy, cheaper money because you're not going to find 5% money out there, 100% financing without a credit check. You need to look at different options as you go forward to maybe even replace the BRRRR option. And that comes down to like subject twos, owner carries, those kind of things where there's creative financing available, and maybe even bringing in partners, credit partners that have the money who want to get into BRRRR and be partners with you. All they do is put up the credit, maybe put up some money, and you manage everything. So there are options out there. You need to figure them all out because this is the time and place to start being prepared. So when property values go down, you could jump in, grab those properties and create that wealth, create the income, and this is the time to do that. So we can help you during these times. If you're still looking to jump into BRRRR, if you have questions on subject twos, owner carries, where maybe you need someone to help you with setting up the docs, the closing, all those things, we could help you. We've done these over and over. We've done literally thousands of them. So we are here to help you. Reach out to us on social media. Email us at info@hardmoneymike. We'll put a link down below. This is the time to be money prepared. We are here to help. We are a resource. This channel is great. We'll keep putting out more information. We have some great videos out here also on this strategy. We could keep in contact. We could keep helping you be money prepared. If you're in the BRRRR strategy, we have a great roadmap to walk you through each step. We'll put a link down below so you could grab that. Anything that you do to be ahead of your competition, this is the time to do it. This is the time to jump in, grab your chance at this money that's going to be created through real estate. Always jump in when everyone's jumping out, and this is the time to jump in. Be money prepared, and let's go make a lot of money.